Hello, traders. It's 8 a.m. Chicago time on Friday. Happy Friday, everyone. It is the 12th of November, 2021. We're about halfway through the month of November. Holidays coming up. This is episode number 2115. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. What we have this morning is a mixed to mild risk on market. But really, it's a dead market. There's not really much going on in the overnight session. Didn't see a lot of activity. We're actually trading inside of pretty much inside of yesterday's range, which is trading inside of the prior day's range. So it's still trading inside of Wednesday's range. Yesterday was very tight as expected. We discussed that. We expected the range yesterday to be between 41 and 71 or so. Expected the market to be trapped in a low volume zone from Wednesday's sell-off, and it did so, and it did so almost too well. And then now the overnight session is balanced in the S&P and is holding sideways. The mover really is the Russell. Not even the Nasdaq's doing anything with this. The Nasdaq completely sideways. So mixed market coming into Friday. Nothing major in the pre-market earnings, and really a quiet news day. Positive news: some auto supply chain crisis improvement. An announcement from Toyota that they are actually gearing up to go back to full production, which they have not done so for 7 months due to the chip shortage and everything else. So we're seeing positive performance so far by a few dozen basis points across the U.S. indices as well as Europe. As you see in front of you, but we're also seeing that the treasuries are up, and that's what creates a mixed market. And so that's where that stands. Let me check on that. University of Michigan. Yeah, that's all the prelim. I'm not sure why they set that up as low impact. That is an important number. So yeah, interesting. So anyway, yeah, that's let's see. Not sure what's going on with these timings here. 10 a.m. Yeah, this should be 10 a.m. These are off by an hour. These calendar events are off by an hour. I apologize for that. Something's going on with this calendar and a time zone. In any case, we do have Michigan Sentiment Prelim. That's a mover that is actually expected at 10 a.m. Eastern, 9 Central. Thanks for pointing that out, Tom. And another key number this morning is the JOLTS job openings survey at the same time at 10 Eastern, 9 Central. The Michigan Sentiment is looking at 72.4 consensus, the prior 71.7. Again, this can be a mover if it's way off. Again, these events here are an hour off, so deduct an hour to get the timing in Eastern time. Not sure if that's due to the just the daylight saving change this past weekend or what. In any case, what do we have? We have an S&P that is completely balanced, 130,000 contracts. We've got only 14.5 points of range, pretty poor range overnight. This is completely in balance inside of yesterday's bounce, which was completely in balance. And so unless this thing gets tipped today, I'm expecting a relatively sluggish trading day. Point of control at 46.54, moving up from 46.50. So we are in the mid-century figure as well, and it just doesn't look incredibly appetizing in terms of engaging. We're seeing Bitcoin coming off. It came off a fair amount from its highs. Ether's still holding up, also off. Ether was pushing 5,000, down at 46.30 currently, and that's where that stands. Let's jump right into our review segment. Not much to add here. The review, as you can see, again, the reason I use, and I get asked this all the time, the reason I use Renko bars, or I use many different non-time-based bars, because I'm not interested in bars being formed where there's no action. And the fact that the entire day yesterday takes up about a third of the screen at the current pixel resolution tells me that compared to Wednesday, Thursday was just pitiful, because Renko bars don't get created unless there's enough directional movement to form the next bar. And so yesterday, as you can see here, was very, very quiet, very choppy day. We did get an early opportunity yesterday. The main trade yesterday for me was the 46.4750 long, which I narrated in the Head Trader channel. Excuse me. The 46.4750 long. The low that morning was 46.47. Was looking for it to get back to 54.75. If you recall from earlier this week, 54.75 was the key level that we would look for a breakthrough in order to push to 33, and that happened on Wednesday. So I was looking for it to get back to 54.75, and it went to 55.75. That was right here. So I was trading basically the dead zone, the quiet zone. Remember, this was 71 to 47 and 41. That's what I put on yesterday's chart. I'm not going to show yesterday's Trader Bite video. We're just cutting that out. It's not necessary, but it's really important to see that actually a lot of the range was done that early. We did extend lower, but the overall swing range was pretty much fixed for the rest of the session at about 10 points basically for each rotation. We did finish weak on the session. We put in our settlement at 43. We moved the prior day settlement by about a point up, and we ended up with a completely Gaussian or normal distribution profile with a point of control resting right on top of. See, this looks like a lot of noise. It's not, once you understand what each line represents. Every little data point on this chart matters to me. Otherwise, I wouldn't have it on there, because I don't need noise in the chart. It's really important to keep charts as simple as possible. But I've been trading for 21 years, and so what looks complex maybe to some, or it should just be a bar chart and a moving average or something, to me, this is not complex. It's giving me the information I need to assess in real time, to assess the context and how things are comparing one day to the next, and in the current day's market generated data. So the important thing to take away from this is that we have yesterday's most traded price on top of yesterday's RTH VWAP, full session VWAP, RTH mid, full session mid. This is the ultimate imbalance. We had, if you look at a TPO chart with the letters, this, generally 9 letters deep, like any price that's 9 letters deep, is an indication, is an early indication that you have balance. If we've crossed a price 9 brackets, and each bracket's a half-hour bar overlapping, if we cross a price 9 times, or form 9 TPOs, 9 times in a 30-minute bar chart, which then on a profile looks like 9 letters or more, you have balance. And yesterday had like 16 letters. I mean, it had the entire range across the point of control yesterday. not the entire range, but every bar crossed the point of control yesterday. So very, very strong indication of balance. Balance generally leads to imbalance. It doesn't lead to imbalance the next day. It doesn't do it immediately. We can have another day of balance where it breaks higher and falls back in. And we are on top of, again, as I said earlier, the 4650. So coming in today, knowing that it's a Friday, knowing that we are trading inside of Wednesday's range, knowing that yesterday was completely balanced, knowing that the overnight session is completely balanced, you've got to, as a trader, tell yourself the market needs to prove to me, I don't have to prove to it, the market needs to prove to me that it wants to reprice. Otherwise, there's no sense in me engaging unless I'm a scalper and I'm looking to fade edges and be active in a choppy market, which is doable, right? So here's the full session. So these orange profiles represent the entire CME session, and then the blue profiles represent the cash session or the RTH session, which is 9:30 to 4 p.m. Eastern. And you can see that the overnight session was basically inside of yesterday's range, was definitely inside of yesterday's extended trading hour range, and we are just completely imbalanced. Now, we have a bit of a double top at the high yesterday, weakish high, and this is likely to take that out. That was the push to 46.6150. We did not take the overnight high yesterday, or the overnight stat yesterday, which is very rare. Remember, the overnight stat is, I think currently it's dropped to 95% historical probability that the overnight high or the overnight low are touched or breached. One of those is touched or breached during the day session, and yesterday didn't even accomplish that. So I'm very skeptical of what today is going to bring. We do have a significant amount of volume at 46.60. Yesterday's high again at 61 and a quarter. We just couldn't get there. As we push higher here, as you see the S&P starting to pull up and push higher, I'm going to pay attention to what it does at this 61.50 area before I would be interested in engaging. In either case, I need to see the market creating an impulse or pushing and failing to push and seeing enough volume failing to push to generate a scalp setup so that we can take advantage of offside order flow or of late buyers, for example, or people who are trapped. We're looking, in that situation, we're looking to trade an order flow trap as opposed to a structured trade. We didn't get much of that yesterday either. So yesterday, overall, between a structured and an order flow setup, we got two setups. Pretty poor performance overall, and it is what it is. I don't have a justification for it or an explanation as to why this is so and why it's going to change today. I'm not sure, but the fact is we have the lower high. Wednesday had a lower high. Tuesday had a lower high to the prior day. Monday had a lower high to Friday. And so we have to look at the daily one-time framing as being bearish. And until it takes out this high today and starts to push up the high from yesterday, 57.50, and starts to push up with an impulse and some volume, it's probably going to be just a noisy false signal laden day. Okay, so Delta's sideways. We're breaking away from the 50 now, but we'll see what it does. I want to just take a brief moment to look at the overall picture. This is the overall picture here. We've pulled back. Let me put this profile on here correctly. We've pulled back, so we've had the pullback. We talked about this pullback since Monday morning after Friday's action. I warned that this is looking very, very toppy and buyers look exhausted, which they have proven to be so. And we have rolled over. We've rolled over, and yesterday we had this inside day, and we are on the edge of that inside day. Look at the wicks on yesterday. really couldn't it couldn't form even an excess yesterday. Very poor. It traded like it was a holiday yesterday. So today it's challenging the top side, and this may get us going back to the MC point of control, which is currently at 46.7275. That becomes a key target. Beyond there, 46.90 is a key target. Right in here, 46.90 is a key target, and then we get to 4700, and then the high is 47.1175 on the top side. The downside, the key target was never tagged. 46.1875 was the key target below, and we just couldn't get to it. This was the expectation was yesterday would be an inside day after an impulse down, and then today we would come in, today or Monday would come in and finish the job, do the continuation trade. But it looks like it wants to reverse today. So again, the one-time framing on the weekly is up, on the daily is down. So to many people looking to trade on a swing basis or the higher time frame, which controls the flow of prices in the market, they're seeing this as a pullback in that time frame. In our time frame, it just looks like noise based on yesterday. Okay, so I'm going to hop on over and talk about briefly where the market is, the general status of the market on this Edge Pro X overview screen. And you can see that we've pulled back to this important monthly VWAP / 5475 zone. This was, I had been talking about this since way back here. There's no magic here. I'm not telling you that I was right. And there isn't anything special, some secret sauce or something I want to sell you so you can do this kind of prediction. It's really an expectation that the market is likely to come back to its volume weighted price once it rolls over. That becomes a key target. So we've been stuck in this zone, and it makes sense. The Dow is quite weak relative to the other indices. Actually, if you watch the Dow trade, you'll see that since the beginning of the month, it's really not picking up as well as the ES is. The NASDAQ, same thing. The NASDAQ staying well below its VWAP currently. The Russell is showing a fair amount of strength, but and is breaking a little bit higher here. But overall, we're in a tangled mess at the mid-century figure in the S&P. And it's likely to continue to do so. There's inflation pressure here in the metals, and you can see it in the notes. The 10-year has responded a lot more to, remember, lower futures prices means higher yield. The 10-year portion of the yield curve is steepening slightly by this most recent action, which is kind of divergent from the long end of the yield curve, the 30-year. So I'm keep watching that to see what the movement is. The euro weakening a fair amount over the last couple of weeks here. You can see it moving away, the euro against the dollar moving away from its VWAP. Same with the cable. Crude is coming off, and it's really struggling. Look at this double top here at crude. So we made a high, we pulled back to the VWAP on the dot at the end of last month, and then we made a run for the high, put in a lower high, lower low, equal high, and if this low goes, this 78 low goes, I'm expecting crude to start taking a look at 72 again, the next major area below. Okay, so that's the overview portion. Let's jump right into what's expected for today so you guys can move on. Here we go. All right, so master levels, stock zones. By the way, there's a webinar next week. It's in this video's description on YouTube. If you go to the YouTube video, you'll see a link in there. I don't have an announcement page for this yet for the broadcast, but we'll be talking about how to trade as a professional, and it's going to be very succinct. And we're going to talk about the absolute minimum you have to have in place, in my opinion, in order to do this professionally. Okay, remember, I've been trading for 21 years. I've backed traders for about 10 of those. and I've got a lot of exposure to what traders really need to put together to have a sustainable process. So, what are we looking at? Let's kill these session prices. So we're breaking away from the overnight point of control. 100% of the overnight inventory is long, 100%. So I'm expecting this to squeeze into the open here. I'm looking for it to pull back to the 58, 54, set up a base, and then, because we've already breached yesterday's high and breached the one-time framing down, I'm expecting that this will be a signal to long-term buyers to start pushing, and the target will be that MC point of control that I talked about at 72.75. That's the big target. So from about 54 to 72, well within the statistical daily range for this product, even while it's compressed. I'm expecting it to be able to get the 72.75. The secondary scenario is if it has a hard time pushing this high and sustaining higher prices, and we see an impulse down. So this is a key factor. This is why I draw this little arrow here. This little arrow means that is implying that we have an impulse move, a 90th percentile move, a rotation. If we have an impulse down, then we are back in that 50 range, and we are likely to go to the other side and threaten yesterday's low, and most likely resume this impulse and get the continuation of the impulse. And in that situation, we're looking for 2075, and it's not shown here. 1875 becomes the target, and the range can expand very rapidly to the downside versus the upside. So catching a move from 60 to about 18 is not that hard on the sell side. So this is very ambitious, very aggressive scenario. But if we do break below yesterday's low, then it won't take very much. The structure here below yesterday's low is not very strong, so it won't take very much to get us down into the 25 area. And if we're at the 25 area, it just has to spit to hit the 19 from there. It's just 6 points. So this would be the ideal scenario 2, but most likely, given how we're configured and how we're breaking away from yesterday's balance, it's most likely going to want to go back up to 72.75. Okay? Are you learning something every day? Because you should be gaining something, conquering something, getting better at something every day. That's what should be driving your motivation to be here. It's not to make money at this point if you're not consistent. It is to gain something every single day. Good luck.